Well, g'day there, traders and friends right around the world. It is James here with you on behalf of Pivot Point Trading, bringing you this very, very important weekend market update. As I sit down and record, it is dated Saturday, July 4th, 2015. Obviously, today coincides with a very important, a very special US federal holiday, that of Independence Day. So I just wanted to take the time, at least at the beginning of this video, to wish you all in the United States, friends and traders, a very happy and extended long weekend as you celebrate your independence from Great Britain in the year 1776. It's quite interesting right now, however, as I sit down and look at these markets, analyze these markets. I've just finished that pro analysis class. It was an hour and a half, it was 90 minutes this week, but to draw away just a couple of conclusions and just to surmise some of them and present them to you right now in this market update is the simple fact that where we are currently trading on the Dow Jones, the S&P, and the NASDAQ is very, very, very important. I cannot stress just what may happen if we start to break some of these key areas of support. As it stands most recently, we had that big sell-off on Monday. The Dow Jones Industrial Average sold off over 350 points. We saw a three-day bounce Thursday through Thursday. This coming Sunday, dated the 5th of July, Greeks go to the polls. They have their referendum as to whether they are actually going to accept the reformed austerity measures or whether or not they're actually going to decline them. We'll see what happens, but what we are essentially set up to do is we're poised very, very nicely to see some form of strong technical damage if we start to flinch below 17,543. To surmise the week ahead, I'm very, very cautious on the equity markets. If we start to push below 17,543 on the Dow Jones, if we start to push below 2,052 on the S&P 500, and if we push anywhere below Monday's close on the NASDAQ, around 4,950, you really need to be prepared for some form of a continuation to the downside. Our targets on the Dow Jones Industrial Average fall at about 17,210, and they also connect around that psychological round number, around 17,000. These are fan lines which are holding up the primary trend which has been established since 2009. During the first pullback and retracement in the market, which set up in the year 2010. We broke the first fan line, we established the second. That moved on in throughout the middle of 2011, where we saw that little minor head and shoulders chart topping pattern. We saw another 10%, 15% correction, which has since then established this third fan line. Since 2011, we've touched it once, twice, three times, four times, five times. I might have to zoom in on the detail right here. The last time we actually revisited this level was late 2014. This was the sixth occasion. This is the weekly chart right now of the Dow Jones Industrial Average. You can see for the better part of 4 months, or since March 2015, we have held at this support level just above our trigger here at 17,543. That is why, as I sit down and do this weekend market update, this level is critical for the upcoming week of trading. It doesn't mean that we may push below it this week, but if in fact we get a close below it, our next targets are going to come in back to where more or less we closed the 2014 year. You need to be at least prepared for this, or understand that this could very well eventuate this coming week, if not maybe in 2 weeks' time. Time will tell, but at the moment we are technically at support. What is interesting to note is that we've actually broken below this past support level around 17,770. We did that on Monday, and we may be setting up some form of a back test, some form of a bear flag setup, which will resolve itself to the downside this coming week. So moving into the week at least, look, we can remain somewhat optimistic on the markets, but we also need to have a little bit of a reality check as to what has been happening over the past 4 months. We're still failing to establish higher highs. We came very close to a breakout on the NASDAQ, very quickly rejected 2 weeks ago. The Dow Jones and the S&P never really pushed up to those relative highs. You can see the highs in May here on the Dow Jones Industrial Average and just where we got to mid-June 2015. The same on the S&P 500. It really looks as though we've sort of broken, accelerated, or really aggressive trend line since December 2014. We've touched it twice, and we're really starting to see a little bit of selling pressure come back into this market. A lot of this market movement right now, at least on Monday, is headline driven. Given, of course, what is happening in the Eurozone, it makes me wonder, however, how much of this sort of topping pattern which we are starting to see on the US equity markets really has to do with Greece itself. Obviously, it's going to be driven Monday morning. Check what is happening in the Eurozone, what's happening on the Greek markets, on the DAX, or even the French or the Great British markets, because that's really going to be a telling indication as to how the US markets are going to open first thing Monday and what we can really expect for the week ahead. As it stands, though, we are in a very, very awkward position on the chart. Will we hold support and oscillate back up to resistance, or are we going to see that critical break below 17,543. Please pay attention. Have a look at this YouTube channel. Subscribe if you want to learn more about market formation and things like that. But it's very, very important that you at least understand that we are at a very, very important macro pivot point as it stands on the 3 US markets. And it won't take a lot to actually break the support and to see this market potentially sell off another 550 points over the upcoming 2 weeks, give or take. I mean, that's really my outlook on this market, depending on, of course, what happens on the referendum in Greece on Sunday, dated July 5th. Outside of that, obviously, our individual top 12 trade list is tailored to this market environment. It has been a really hard market, at least over the past 3 months, just based on all of these awkward movements back and forth between support and resistance. But really right now, I'm just waiting for the big macro picture to break. Whether we break out and continue the uptrend above 18,360 or 386, that will be a really good indication that yes, this bull trend is going to continue. But if we start to see again this technical damage down below this critical figure right here, you need to be prepared for what could be some big selling blocks flowing into the market this upcoming week. So I'll leave it at that. I won't touch on any of the individual trades. I've gone through that over the past 90 minutes in that pro analysis class. Have a look if you're interested, but it's really a time right now to be very cautious on how these markets are trading and what may eventuate over the upcoming weeks, maybe even this week. Greece may be the impetus to really push this market below this critical level. If that happens, you're going to see a very, very quick correction down to these very big macro areas of support. We'll see what happens if the market gets down here, but that is at least my forecast or what I'm open to moving forward and further into July 2015. Traders and friends right around the world, and of course to our extended family in the United States, again, have a fantastic 4th of July long holiday weekend. And I'll be back next week for some intermittent market updates as the markets progress. Have a great weekend, everyone around the world. It's James signing off on behalf of Pivot Point Trading. All the best. Goodbye.